Okay, you've probably gotten your notification. You've received your W-2. You've gotten the interest statement from the bank and all of that. You're getting your stuff together to file your tax return. Some people make some pretty obvious boo-boos that send up red flags for the IRS. We want to give you a little help on some things to do to help avoid an audit from the IRS. Joining us for a few minutes on KFAB's Morning News is Kyle Walters. Kyle, good morning.
Hey, good morning, Gary. How you doing?
I'm well, thanks. One thing it says, don't fail to file. You'd think that'd be pretty obvious, but apparently a lot of people forget that one, huh?
Yeah, you would think. I mean, it's kind of one of those things. We've talked to clients that just say, they'll come in and they haven't filed for, several years. And, just because the IRS hasn't reached out to you doesn't mean they won't. So step number one, file your taxes, right, so we can start basic.
How many years before they come knocking on the door if you just don't file?
Well, who knows, right? The actual chance of getting audited is a lot lower than most people think. So for the average taxpayer, it's under 1%. As income goes up and some of your write-offs go up, that number can start to ratchet up. But just because you have low odds, if you've been a taxpayer for a really long time, those odds start to add up.
Yeah. But if you skip 1 year, eventually that'll show up, right? I mean, it's not just multiple years. Like if you've been filing and then this year you don't, and then next year you do again, they will catch that eventually.
Yeah, I mean, I think what a lot of people don't realize is the IRS gets copies of the documents that you receive. So 1099, W-2s. So their systems are going to match those up. So even if you do file and you don't, or you omit, one of these 1099s to come in or a W-2 or one of these forms, that's going to send up a red flag to the IRS, and they may come checking on you.
Okay. What else is an easy way to avoid an audit that a lot of people forget?
I think the easiest things are, just be aware of what the IRS is looking for. So things like the home office deduction. It's not that you can't take it, just make sure you understand the rules. If you're doing more than, the IRS's simplified method on the home office, make sure you've got somebody helping you through that. When you're doing charitable deductions, if you're donating more than the average person in your income bracket, the IRS looks at these bands. So if you're above that, make sure you're keeping really good records so that you're letting them know ahead of time so they don't come checking. Okay.
One thing I've wondered about, a lot of us do this, Kyle. We'll take boxes or bags of clothing or other items to a charity like a Goodwill or Salvation Army or something. How do you accurately? I mean, what's acceptable as far as claiming how much that stuff is worth?
Yeah, that's a great question. We see people all the time. They'll do garage sales and all this to get rid of their old stuff. You can actually get great deductions on these clothing items and all these pieces that you would just give away. The IRS has got guidelines on their website, so it's I would just Google IRS, deduction guidelines, and it'll tell you how much you can write off for an old microwave and an old shirt and all these pieces, and you want to add them all up. And if it becomes a sizable amount, once you get to about 3 digits, start getting receipts. Or every time you go to that Goodwill station, get a receipt, make sure you add it up so you got the right documentation.
Okay, and finally, I noticed this one, and I'm curious to have you flesh it out a little bit. It says, try not to have no income. And I assume we're talking here about if you have a business and your write-offs add up to zero income, that's a bad idea?
Yeah, the IRS has got a thing where, they realize that people don't go into business to not make any money. So, if you're showing a decent amount of revenue, but then all of a sudden your income is zero, they start to pay attention to that.
All right. Good advice. You've been in audits, I assume, with clients, right?
Yeah, I mean, we handle clients in the tax space. We handle them on the wealth management space. So kind of across the board, we see what happens.
Is that a scary situation?
Yeah, that's also a good question. I mean, I think most people, when I hear the word audit, I mean, I imagine IRS agents in black suits descending on my home, right, rappelling down my roof. But that's not really how it happens. More than half, 75% of these audits, they're done in the mail.
Really?
These are not, so, most people are just going to get, and a lot of times clients actually get money back during an audit. So if you have a good tax advisor keeping track of your records, there's a chance that an audit could be a good thing for you.
Yeah. Man, I got a notice one time several years ago. I'd done a little work for outside work, and there was a decimal error on the W, whatever form it was. I don't know, 1099 or whatever it was. And I think I made $220 or something, and it said I made $22,000, and I owed him like $1 million. I said, wait a minute. So I called Loophole, my accountant, right away, and he fixed that. And it was all done by mail. So
yeah, it's funny how those decimals really make a difference.
But I would add this: don't ever, if you ever see anything come in the mail, and it says anything like Internal Revenue this or that, pay attention to that immediately, because it could look like junk mail. But guess what? It's not.
No, absolutely. Especially this time of year, make sure that you're opening and keeping track of all your mail.
Very good. Kyle, thanks. Good to have you on. Appreciate it. Kyle Walters here on KFAB's Morning News.